think you made a really good point about some, pain and weakness if the economy does slow down. And to your last point, that's where we have to be very careful in locations we do buy in. And
Yeah,
obviously not buying at the top of the cycle. Like the market has been growing for the last few years. So it's important to understand there could be a hot market today, but if you're only seeing, growth potential for the next 12 months and that market kind of, stagnates and stops growing and you're stuck in an asset that doesn't see growth for long term, are you making the right decision? So these are all the things we're looking at with clients because this is kind of like a crucial inflection point with a lot of the markets today. So that's very
yeah,
crucial. And I know
yeah,
like this seems very bullish. Like there's a lot of green on this chart. It's a very bullish chart overall, but
yeah,
this is an aggregate view. I think you
yeah.
you read out really well. There will be some pain because
Mm,
if there are any kind of corrections in other markets, like your share market, US driven, whatever it is, that will cause an unemployment rise. That
mm,
will ensure that people find it difficult to buy or hold properties that are more unaffordable. So
yeah,
within, Sydney, where there's, markets that are like 20x your household incomes, those
mm,
those markets are not going to be, growing at the same rate as different markets in the
yeah,
country. In fact, they'll be declining. They're declining this year as well. So there's a lot of kind of nuances into how we should look at this market. But overall, I think as an asset class, as from a growth perspective, you will see it stand out.